Yeah, I think Robinhood with a question mark would probably be better because I don't think that.
Good afternoon, VV Nation. Welcome to our YouTube channel on for Trending Thursday. Glad to have you here. And you know, I want you in the room to type in VV Nation. VV Nation, stand up, be heard, be seen. This is an awesome place to learn about what stocks are making news in the market and how to use the power of the VectorVest software to analyze them. And, you know, the news is the news. We get caught up in the news. We get caught up in what people say about stocks that are in the news. And this is a good place where you can take that information or take that data and sift it down to usable information. So for all of you who are here, I want to say thank you for being here. And, you know, I want to put one other thing. Ooh-wee. That's right. VV Nation, stand up today. We want to say thank you for being here and supporting the channel. If you're brand new to the VectorVest channel, by all means, please look below the screen. Look below the screen, and I want you to subscribe to the channel, especially if you like the content. We still have more people here watching that are not subscribed to the channel than are subscribed to the channel, which I find that kind of interesting. All right, so you show up, you like it, but you haven't subscribed to the channel. All I'm asking you, if you really like the information, you like the content, support the channel. Within the last month or so, we have grown by leaps and bounds, and that's all because of you. So we want to keep that going on. My name is Glenn Tompkins. I'm a senior instructor here at VectorVest. Been here for about 16 years, and that does not make me a genius. It doesn't make me an expert, but everything I've learned about the market came through the usage of the VectorVest software. All right, so before we get started, we do have a guest here today, new from our Ohio office, Clayton DeBert. Clayton works now part of the education department in Akron, Ohio. He is a young guy who's really full of spunk, and he's got a lot to show in regards to how to effectively invest in the market. So what I want to do is I want to invite all of you who have children who haven't taken advantage of learning about the market, or all of your grandchildren who you're trying to get interested in the market. Clayton is the guy that you're going to want to have them listen to. And he's going to talk a lot about how to invest in the market as a brand new person to the market. So you can feel comfortable in knowing that your children that you have him talk to, or your grandchildren, they're going to be put in the right place to learn how to effectively start to invest in the market. And he's going to have a new segment here on YouTube. Right now, I believe they are going to be recorded sessions. So as long as you subscribe to the channel and you click on the bell icon, you will be alerted to when his presentations go up. And I've known him for a couple of years. He's an outstanding individual personally, but I've watched him grow with the knowledge base of understanding the software and how to teach people how to apply it. So I want everybody in the room to give him a warm welcome. I give him a warm welcome, and I think that you're going to be extremely, what's the word? You're not going to be disappointed in what he has to offer. And today, as I go through the stories that we do, I'm going to have him chime in and talk from the perspective of a brand new investor in the market. You know the way we do. We look at a lot of technical things, but I think today is a good day where we scale back a little bit and we get into understanding how to do it from a real person or a real new person's perspective. So before we get into the market, let me bring Clay on. Clay, you can say a couple of words before we get started.
All right, thank you so much, Glenn. And yes, as Glenn said, I am a real person, so you're going to get a perspective from a real person today.
Wow.
But no, more importantly, guys, hopefully I can bring a new take onto some of the stuff that we look at, because we know by now that a lot of you guys, especially if you are VV Nation, you've seen the program, you know how to analyze stocks, you know what VectorVest is capable of, but there are a lot of people out there who just get overwhelmed. You know, they look at a stock, they look at a news article, and they're overwhelmed immediately. They don't know if it's a good thing that stocks are going down, if it's a bad thing that stocks are going down. So hopefully I can just bring a new set of eyes and a different perspective to things.
Excellent. So again, folks, Clayton DeBert, that's going to be a name that you're not going to want to forget. And like I said, he's going to be awesome at what he does. So what we do every week is we always start off with what's going on in the market. So I'm going to bring up the market timing graph. Oh, Clayton's not on that one. That's what you just said.
That's what I just said.
So go to the other one.
Or you can just go through it real quick.
No, all right. I'll just go through it real quick. All right. So what's going on in the market? Market's down. All right. If we go look at our major indices, all of the major indices are down right now. All right. Everything. The Dow is down over 1,400 points. The NASDAQ is down over 3 points. So if I look at it, the Dow in and of itself is pushing 5.5% down. The NASDAQ pushing 4% down. The S&P pushing a little bit more than 4.5% down. And our VectorVest composite is down over 4%. This is a big down day. And we're going to talk about a little bit what's going on in the market from that perspective. Our market timing gauge, which is our daily traffic light into the market, today now has one red light. The color guard is mildly bearish. VectorVest does not advocate buying stocks at this time. And none of you out there should have been blindsided by this. We've been talking about the market being toppy for 2 weeks. For 2 weeks. So with that being said, nobody should have been blindsided. You shouldn't have had a ton of money in the market. Number one, you should have been defensive on your long positions. Number two. So with that being said, we're going to get into why the market is doing what it's doing. But red light in the color guard pricing column for the first time in a long time. The primary wave is down. This is an opportunity for you to start to think about taking advantage of the market to the downside. With that being said, looking at our stocks, we track over almost 8,200 stocks. Of those stocks, we have 3,390 buys, 562 sell recommendations, but now 4,244 holds. The market was on fire. Right now, the fire might have been quenched for a little bit, but we understood what was going on and why this was going to happen with the market being toppy. So with that, let's start talking about the first news story. And the first news story that we have, let me bring that up over, there you go. The first news story that we have is the Fed sees interest rates staying near zero through 2022. The GDP bouncing to 5% next year. So a lot of what was going on with the Fed information yesterday is that interest rates are going to stay the way they are. We still have a strong economy compared to all of the other economies around the world. All right, so keeping that in mind, and the Fed says they're not thinking about raising interest rates. They're trying to keep the economy the way that it is. And the Fed, and I say this over and over, the Fed's got the spigots wide open. They are still buying our debt. In addition to the rates move, the Fed said it would keep buying bonds targeting $80 billion a month in treasuries. That's a bunch of money, and $40 billion in mortgage-backed securities. So put those two things together, folks. The Fed is buying our debt, and at an interest rate as low as it is, when we got to go pay it all back, when we got to go pay, we're still sitting between 0.25%. But it's probably not going to help the banks much at all, right? So that is the main story that I wanted to bring in, is the Fed meeting yesterday, and that's huge in regards to the interest rates. That is huge in what we're going to do going forward. So let's go back into the VectorVest software, and let's go to our watch list for today. We'll go to our watch list viewer. We'll go to YouTube Trending Thursday. These are the stocks that we're looking at for today for 6/11. All right. Here's our stocks, and the first two that we look at after we look at what's going on in the market is we look at the VVC for those of you who are VectorVest subscribers, and for those of you who are not VectorVest subscribers, to keep you on board with what's going on in the market, why not look at the spiders or the SPY? So we're going to look at the VVC and the SPY. I have them both highlighted in my watch list of stocks today. I'm going to right click and I'm going to view the stock graph. Now, just to keep you all informed, we are now podcasting as well. So with that, as I start to walk through these graphs, I'm going to keep in mind that some of you may be listening by way of podcast. So I'm going to try to be as descriptive as I possibly can, so that even if you couldn't join us here live, that you're still going to get the feel of being here live. As we look at the S&P 500, on our graph, we look at a 20-day exponential moving average, which is depicted by a purple line on the graph. We can see that between yesterday and today, the market is gapped down tremendously, and currently the S&P 500 is currently trading below the 20-day exponential moving average. We can also look at the relative timing on the S&P, which tells us if the market is in an uptrend or not. We are still in an uptrend because RT, which is cast on the scale between 0 and 2, is currently still at 1.45, but it is trending down as the price of the S&P 500, again, is trading below the 20-day exponential moving average. So keeping that in mind, the spiders or the S&P 500 is still in an uptrend, but with today's big gap to the downside, we were already preparing you before now to keep and tighten stops on the stocks that you were in. So when this gap hit today, hopefully you were not grossly adversely affected, because you should have already had tighter stops on your stocks. Now, that's for those of you who are not subscribers. For those of you who are VectorVest subscribers, the same thing. How about for 3 days in a row, now the market has gone down with the big gap today, and the VectorVest composite is currently trading below the level of the 20-day exponential moving average. RT is pulling back as well, not as high as it is on the S&P 500. On the VectorVest composite, it is at 1.17. So the market is still in an uptrend, but not as fast in an uptrend as the S&P 500. Keep in mind, though, the S&P tracks 500 stocks, whereas the VectorVest composite tracks almost 8,200 stocks. So there will be a difference. But given what the market, what we talked about, the recovery right now from the Fed says it's going to take a lot longer than anticipated. We also have a ramping up again of COVID-19 cases. And I'm going to put my own little 2 cents out there. I think that with COVID-19 ramping up again, I think that we're going to be hard pressed to lock the country down again. I don't think that the country can withstand another lockdown again. But this is what's happening. The market took off from the March 23rd low. Everything was rocking. Even stocks that you thought shouldn't be moving were moving, because people were looking for places to put money, because the market was running. So you look at what the Fed says, we look at the ramp up of the COVID-19, and I don't think that the news that the recovery is going to take a lot longer than anticipated resonated well with investors. And before you start thinking about panic selling, let your stops manage your trades. Let your stops manage your trades. So that is my overview on the market. On my next story, I'm going to bring Clayton in. But does anybody, or Joey, is there any questions in regards to the market overview right now?
Nothing particular to the market overview, but Leonardo says, what is the best time to invest? When the price of the stock is far away from the 20-week moving average, or when the stock price is just over the 20?
So a good question is probably answering the question of a moving average crossover. You see right here, and again, for the people on the podcast, you won't see this. But for the people who are here live, I'm going to show you something. Here's the 20-day exponential moving average. Question is, when is the best time to buy? My first answer is going to be when a stock's price, in the case the market, price goes above the 20-day exponential moving average and starts moving up. Now, as the market has been moving, you say to yourself, well, I want to buy into it. All right, you buy into it as it's above the 20-day exponential moving average. How do you protect yourself? You put stops. In this case, this is on the market, but if this were a stock, you would put stops on it, and I would look to see if the price fell back below the 20-day exponential moving average. When that happens, that's probably a good time to get out of the stock. But for an early entry, when the stock's price first moves above that level of the 20-day exponential moving average. That's a great question. Any other questions, Joey? No? All right, so I'm going to close out of the graphs. That's to give you a sense of what's going on. Now, if I go back to the home page, my first thing I'm going to tell you is don't panic sell, folks. If your stops are getting you out of the stocks, let it happen. And let it happen. That way, you're going to put yourself in a better position to not hold on to stocks longer than you need to. But don't panic sell. Don't go sell everything. If your stops are still holding you in the stocks, then let your stops manage the trades. Let your stops manage the trades. All right, we're going to get to our next story, which goes along with this story. Stanley Druckenmiller says that he's been humbled by the market's comeback, underestimated the Fed. So this was prior to the Fed's story yesterday, and a lot of people were feeling the same way. Man, the market is moving, and wow, this is great. And this was somebody out there that was saying, Stanley Druckenmiller said the market's strong performance over the last 3 weeks has humbled him, and he underestimated the power of the Fed. So what we be telling, so this is somebody who's well known in the industry, all right? But what have we been telling you? Not that to be humbled, but to be prepared. All right, to be prepared. So I have this story in there because I want to show you what the experts say and the power of the VectorVest software. All right, so with that, let's move over to coronavirus. Now, everybody knows that we've been looking at a coronavirus watch list, and I'm going to put that in here. We've been looking at a coronavirus watch list has made a lot of people a lot of money, especially due to COVID-19. We've created a watch list that we were showing back in early February before the pandemic actually hit. And man, here's another story. As COVID-19 starts to ramp up again, here's a stock. Twist Bio expands offering of synthetic coronavirus controls. They added 4 new synthetic SARS-CoV-2 controls to its offering that included new variants of the coronavirus. It launched its first 2 controls in March, and controls are used in the development and validation of diagnostic tests. So this stock made the news. What I'm going to do is go back to my watch list. All right, let's go back to my watch list. Let's bring up Twist. Here it is. Now, I'm going to give my insight, and then I'm going to also bring Clay in from a different perspective. I can see clearly that the price of Twist is trading at $36.78, which is way above its value. For those of you who may be new, value is what we feel a stock is currently worth, and our mantra is to have you in safe, undervalued stocks that are rising in price. Now, because the stock is trading above its value doesn't make it a bad stock. It just means that people are willing to pay a premium to own the stock, and if enough people are willing to pay that premium, the stock's price is going to go up. Our indicators like RV, RS, RT, VST, and CI are all our core proprietary indicators, all cast on a scale between 0 and 2. When the indicator is above 1, it's favorable. When it's below 1, it's unfavorable. Relative value looks at a stock's long-term price appreciation potential. Relative safety is an indicator of risk, and it looks at the consistency and predictability of a company's financial performance. RT is an indicator that looks to tell me if the stock is in an uptrend or not, because it looks at the short-term price trend of the stock. And VST is the combination of RV, RS, RT, wrapped into one master indicator of which we use to rank our stocks. And CI is an indicator called Comfort Index, which looks at the stock's ability to withstand long or lengthy price declines. Now, my take on this, as TWST Bio, the fundamentals are not there, but the stock is moving up. This is a stock that would be more of a trade. So that's my take on it. Clayton DeBerte, Pepe DeBerte, I'm going to have you chime in on this from a different perspective.
You know, Glenn, I agree 100% with you, though. You know, I've looked at a lot of stocks in VectorVest, and I see things such as RV at 0.32, relative safety at 0.74. And like you said, the RT, yes, is 1.45. So the fundamentals aren't there in this company, but for some reason it's going up. And what's the reason it's going up right now? Like you mentioned in the news article, you know, we're talking about coronavirus. It's almost like anytime you have good news about coronavirus, especially if it's a drug company or somebody trying to come out with a vaccine or moving to the forefront of that drug race or so on and so forth, it's almost like everybody wants to jump in because they have the fear of missing out. You know, they don't want to miss out on the opportunity for a company that could essentially have that breakthrough. So it's really hard to see, or even for myself, consider investing in a company that's got an RV at 0.32. And, you know, you look at VST, and we can see that VST is above 1 right now because RT is so high. So the uptick in RT is what's bringing the VST up. But if we just go over a little bit more without even graphing this stock, if we go over to EPS, you know, this company doesn't make money. They have negative earnings, negative $2.95 per share. So, you know, that's another thing that you could even look at too. Why buy a stock unless you're making a trade, like you say? Why get into a company that's unprofitable, that's losing money on an annual basis?
Excellent. And I like the idea of many of the people that are in this room may not be seasoned traders. But, you know, when we look at the analyzation of a stock within the VectorVest software, it's going to make it easy for everybody who's in VV Nation, whether you're brand new to the market or whether you are a seasoned investor. This kind of analysis brings to the forefront what's best for you. So I am looking at it strictly as a trade. Clayton is saying that maybe if you're a little bit more new to the market, this may be a stock that you might want to stay away from because fundamentally it's not sound. All right, fundamentally it's not sound. So thank you for that. We're going to keep on going. What I am going to do as I look at TWST, I am going to go look at what we do every week, our coronavirus watch list. I'm going to scroll up. We do have a coronavirus watch list. And currently in that watch list that we've created, I think we've got 42 stocks. There we go. TWST is one of them. But the best way, I think, for anybody as we go through the coronavirus pandemic hold scenario, there are stocks in this watch list that you can take advantage of. And as you build your watch list, go click on % price change. Every day you can do this and stay on top of which stocks are making money. Someone asked me what's my trading philosophy or strategy on mRNA. This is a stock that I've been touting since all of this popped off. It's one of my favorite stocks. I think that this is going to be one of the companies that's going to come up with a vaccine, one of the first companies that are going to do it. And I'm going to tell you, use stops on the stock. On all of these stocks, because they are more trades, make sure you have good stops on them. Tighten the stops, because they could be up one day and the next day they may not be. So these are more trade-related stocks. But this coronavirus watch list, folks, can provide an excellent opportunity for you guys to make money and to do so on a day-over-day basis. What do you think, Clayton?
No, absolutely. And one of the most important things you said that I noticed was use stops. And I know a lot of new traders, when they're getting into the market, they don't know that stops or, take profits or stop losses are even available to them. So, you could get in a trade like Moderna without a stop. And then if something bad happens, or any stock for that matter, but if something bad happens and you have nothing to limit your downside risk, it's dangerous. And I know a lot of that happens to a lot of new investors, and they get burnt right off the bat.
There you go. All right. So let's go to the next story. Oh, Joey, do I have any questions?
When is the best time to invest in Contra inverse ETF?
I'm not ready for Contra ETFs yet.
Okay.
So why'd you even listen? I'm gonna get the Contra ETFs. Hold your horses. I'm gonna get there, because that's a great question, especially what's going on right now. Any other questions, Joey? Stop reading off the questions you shouldn't be reading off just quite yet. By the way, Joey is my right-hand man. Say hi, Joey.
Hi, Joe.
Say it a little louder so they can hear you.
Hi, Joe.
All right, so you know what I'm going to say about that? Now, say it again so they can hear you.
Hi, Joe.
Really? All right.
Play the knockout.
I'm going to play the knockout one. All right, so moving on. Joey is awesome, believe it or not. All right, here's my next story. For everybody out there, and there's a couple of them. Is Rich in here today?
Yes.
Rich has been getting on my case about oil. All right, over and over in oil, and every week I make you type in the word that I want you to know before you buy oil. What makes oil go up? And Joey will repeat it back to me when you type it in the room. What makes oil go up? Who's the first person that types it in? Let me see. The first person, what makes oil go up? And hold on. While that's happening, nobody put it in?
Mark Norton.
Mark Norton. All right, so Mark says demand. Demand is it. And I understand why crude went up the way it did. And I can be the side chair quarterback, or I could be the Monday night quarterback, however you want to look at it. But I've been putting it out there since when oil started taking off and we had all that supply. People were buying oil because it was so low. Now what's happening is gone up, and guess what? They're taking, now if they didn't take profits, if they didn't take profits early, they're still sitting there and they're going, holy smokes, what just happened? The demand is not there. My next story says Brent crude will need to work through oversupply. Oversupply ain't demand. It needs to work through oversupply issues despite the OPEC output cut. All right? The oil producing countries said that they were going to cut back so they could stabilize oil prices. Well, some of them did and some of them didn't. The demand is not there yet, and I'm still putting it out there. If you're looking to get into oil, wait for confirmation. Now, if you're a little bit more aggressive, did Rich say anything in the room at all? No, he's being quiet, isn't he? No, he's probably going to just jump up and say something, but that's all right because I like Rich. All right, but everybody invests a little different. If you were a little bit more aggressive, you did have an opportunity to buy in the oil. If you were looking for more opportunity or more confirmation before pulling the trigger, it's not there yet. Now, do I think that oil is going to stay where it is forever? No. Long term, do I think that oil is going to be a good play? Absolutely. Why? Because we need oil. We need oil, so it's going to run up. It's always a right time to be in a stock, and sometimes there's a bad time to be in a stock. So tell you what we're going to do. So that's on my Brent, on my crude oil. Let's go back to my watch list for today. You know, the main ticker symbol that I look at for oil is the USO. All right, not the military USO, but the U.S. Oil Fund ETF. All right, because it's an ETF, price and value will always be the same. The fundamental indicators on oil on the ETF will always be the same at the value of 1. But this is the big thing. What is the RT on that ETF? It is at 0.48. Oil is still not in an uptrend yet.
Jay says your cup is ugly.
My cup is ugly. Which cup? You talking about my black cup? My Duke cup. You talking about my... Listen, Jay, where's Tom? Tom, take Jay, put him in the back. As a matter of fact, stick him outside. All right? Because this is what I got to say to you, Jay. All right. So Clay can't hear these sounds, but you guys can. So there you go. Looking at talk about my cup. You don't talk about my cup. All right, USO. The U.S. Oil Fund ETF, RT is below 1. Oil is still in a downtrend right now. Clayton, do you want to add anything to that before I go further?
No, I don't think I need to add too much to that, but talking about supply and demand and oversupply, and like you mentioned, I don't know, maybe 10, 15 minutes ago, with a possible resurgence of the coronavirus, and I agree with you. I don't think that this country is going to see another lockdown like it did before, and I think people are over that, but I don't think that original demand for oil is going to return anytime soon. So that article said, we have to work through that oversupply and then figure out that equilibrium where supply and demand have that beautiful relationship again, and then we'll finally be able to see, what we need to see for this RT in USO to go back above 1 and oil to start trending higher.
We need to get through the supply, folks. We need to get through the supply. Let me pull up a graph on USO. View the stock graph. There it is. There it is. Whoop. There it is. There we go. You can't. I'm mad because Clayton can't hear the sounds. All right, but you know what happened right here with oil? That's exactly what happened with oil. And then my good friends like Rich was saying, yeah, it's a good time to buy oil. Well, why? Because oil had hit like historically low lows. Look at that. That's 5-year graph. That's a 10-year graph. Historically low lows. So who was jumping on board? The people who were saying, man, we need to get into oil because you're never going to get a deal like this again. And you know something? You're right. Now, I do see that the USO is above the 20-day exponential moving average. What's not backing it up? RT. That's only an indicator you'll find in the VectorVest software. RT is not telling me. Now, it did jump above the value of 1 for a quick hot second, or right at 1. What is it at? RT is at 0.64. What is that value? Oh, never mind. That ain't 1. We're so far below 1 that ain't 1. That's far. That's down. That's so far down. There we go. I'm going to drop the bomb again. You dropped the bomb on me, baby. All right. And with that being said, I need RT to get above 1. I really do, to give me confirmation. But it had its run for a little bit, and the primary reason why is because oil was so low. Now, I'm going to close out of that. I got a watch list for oil. You know something? You ever hear I wrote a song for that. Well, guess what? I got a watch list for everything that we talk about. Let's go with petroleum stocks. In this petroleum stocks watch list, I have 64 stocks. The big thing, I went through the industries, all of the industries for petroleum, and I put them all into one watch list. But I wanted to make sure that all of the stocks had a price of at least $1. And if I scroll over, I wanted an average volume of at least 100,000 shares. Now, some of these average volumes dropped a little bit. So I've got to go through and retool this for some of the average volumes. And if these stocks have been beaten up so much that some of the average volumes have gotten beaten up, I'll probably go back through the list and take out the ones that don't have any longer an average volume of at least 100,000. This is another list. If you're really strong on oil, sort this list by percent price change. Let's go see which ones are moving up the most. Nothing. Oil is getting that beat up that right now, as of today, in and of itself, I wouldn't be in oil. Notice that a lot of these oil stocks have a relative safety below 1. All right, look at that. Look at that. Only 1, and that's a direct Sean. That's on Gush. It's got a value at 1. But every single one of these stocks within the petroleum industry having a relative safety below 1. Why are there RTs above 1? Because a lot of people were buying into them as oil had bottomed out. And so the RTs are up there. Not a lot of relative values. If you are looking for oil stocks to look in for the long term, sort the list by relative value. WOPI Whoopi. You down with Whoopi Dopey? I don't know. Anyway, Whoopi. Whoopi looks like a good long-term play that's going up right now, but the safety is not there. OMP. You down with OMP?
Yeah, you know me.
All right, Joey said, yeah, you know me. All right, so there are some stocks that are in the list that are good long-term plays. The safeties are not there. Some of the RTs are not there, but this is a good way if you are looking to play some oil stocks, a good way to look at them. Anything you got to add to that, Clayton?
Oh, absolutely not. I mean, when RT hits a low like it did on oil, you know, when you have negative oil prices on futures, everybody wants to get into it. I mean, that's a trade right there. When prices are so low, I mean, if I've got my dad calling me up and saying, hey, should I buy oil? Guy's never made a trade in his life, but he knows that oil prices are so low that he could potentially make some money on it. So that right there is just going to cause an explosion, and that's why you're going to see RTs above 1 when value, safety, that kind of stuff is still low.
Let me ask you this question. If there's a brand new person in the room who's looking at some of these stocks and saying, well, the RT is above 1, the stock is a buy recommendation, what would you say to them?
You know, I wouldn't say don't make the trade.
Okay.
The first thing I would say is, you know, it depends on if I know the person or not. If I don't know the person and they've never checked themselves as an investor, if they've never said, you know, I'm okay with holding riskier trades, or I'm okay with holding more speculative trades, then, you know, if that's not something they've done before, all they're going to do, they're going to sit up at night, they're going to worry, they're going to buy into the stock, and they're going to say, oh my gosh, I just bought into this thing, but it just went down another 10% today. This isn't something that I can stomach. So with with no safety, with no relative value, but the RT is trending higher and the stock's price is trending higher, you know, that's a riskier trade and a more speculative trade. But if they can handle that, if they can stomach it, and that's the type of investor they are, as long as they're aware of that, you know, I'm good.
Let me tell you something. That's truth right there. And that's why when Clayton goes out and starts to do his presentations, that's why you want to send your kids to him. That's why you want to send your grandkids to him, because that kind of insight takes the brand new investor and puts them on the right path to start making money from the beginning. Because a lot of brand new investors go blindly into what they see and what they hear, and then they blow up their accounts quick, and they don't know why. This is why Clayton is going to be a very important part of this team to help the brand new investor. And that insight that he gave him right there, that information that he just gave you right there is it in a nutshell. And that's why he just gave his own credibility of why you need to go watch him. All right.
Thank you.
For all you guys that are out there, if you haven't already, remember, subscribe to this channel. I want VV Nation to support Clayton in his adventure as well, because as you can tell, he knows what he's talking about. And I want to make sure that you guys support him. Just like you support me, I want you guys to support him as well. Don't forget to subscribe to the page. All right, let's get to my next story. So that was on oil. Next one is airlines. Everybody's been buying. You ever remember the show, Everybody Loves Raymond? All right, well, this is the same guy. Everybody likes airline stocks. You know why? Because they were moving. That's right. You hear my 707 in the background? Because they were moving. Well, what happened with airline stocks? Well, they were moving because coronavirus hit, pandemic hit, and when people got an opportunity to go run and go fly again, they were just jumping all over the planes. Now, they were supposed to have been doing some social distancing, weren't they? I saw a lot of pictures with airline planes that were full. Why? They was taking that money. They was getting that money because they had been all jacked up from the pandemic. Man, they say, give me that money right there. He said, you better have my money. And they said, that's exactly what they said when the people jumped back on the plane. He said, you better have my money. But I got to sit right next to this dude. No. You better have my money. And that's what happened. So an analyst says that bets on another 25% rally. Let's see how good this story really is. All right, so this is somebody who gets paid to go on CNBC and talk to these people and look studious, he's sitting there going, yeah, hey, we're going to go up another 25%. Woo! Just like that. So let's use the power of the VectorVest software. We're going to use one stock that looks at all of the airlines in one ticker symbol, and that's going to be JETS, 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 Jets. Never say that to me because I'm a Giants fan. I'm from New York and I'm a Giants fan. Never say JETS to me. Anyway, U.S. Global Jets. All right, this is another ETF, so the price and the value will be the same. The relative value and relative safety will be the same as well. How about they are pulling back off of their RT being above the value of 1? Why? Because now it's not so good right now. All right, so let's do this. I'm going to right click. I want to take a look at the graph. So Jets was rocking. Look at that parabolic, keyword there. Look at that parabolic move on the stock. What goes up must come down, and boy, did it come down. And right now it's trading just below the 20-day exponential moving average, and this is the key thing right here. Remember I told you RT was rocking when it was rocking? Now that the stock's prices fell, RT is now below 1. That's a telling sign. Let me go back in time. Let me go back, way back. When RT went below the value of 1, what subsequently happened to the stock? This is the whole industry in one ticker symbol. Look at that. Whew. Look at what's going on right now. Be careful with those stocks. And I'm sure that many of you made some money in the airline stocks when they were rocking and rolling. Absolutely. I actually did it as a Trending Thursday story when it was rocking and rolling. And you know, one thing that still catches my attention when I look at airline stocks, and I do have them in a watch list. I got a watch list for that. I got a watch list for everything. I got a watch list for airline stocks. In here, I think of the major airlines in here, there's 8. You know what really still caught my attention? When they were rocking and rolling, all of their RVs were above 1. All of them. All right, if I go back in time, all of their RVs were above 1. What's going on right now? RVs are below 1. All of their RTs were above 1. What's going on now with them? RTs are below 1. So that's my take on it from a new perspective. Clayton, if someone is a brand new subscriber was looking at the news and they were talking about, yeah, airline stocks are rock and rolling, as a new subscriber, what should they do now? What do you think? What do you think they should do now?
We're talking about new subscribers, not just new investors, right?
I'm sorry, new investors. I got to use the right terminology. New investors.
Okay, because I was going to say new subscribers. I mean, obviously we can see here that, I mean, when we see percent prices dropping 15% almost across the board, a lot of new investors, they're going to see cheap opportunities. They're going to see opportunities for potential growth. I mean, we know that airplanes are going to stay around. But we don't, however, know how long it's going to take for each one of these companies to rebound, to get back to where they were. You know, I think I read an article a couple days ago about, I don't know if it was American Airlines or another airline company that was bringing back X amount of jets out of storage. The pandemic and the lockdown and that graph you were showing on jets not too long ago, Glenn, you could see that when the lockdowns started to become announced, the ETF just started to drop. It went from top left to bottom right, and then it found some support down there, it bounced off support again, and it started to go back up, and it was almost in line with, I don't know, the end of May, when the lockdown, when all the social distancing started to ease and quarantines across the country started to ease, and I know countries across the world began to open up their borders, and they began having that free travel, not free travel, but people were able to travel again country to country. Yeah, as we can see here, you know, it did find support down here, bounces off support again, tested again, and then finally, I really think around here is when people started to get a little uneasy and just cabin fever, and everybody wanted to leave the house. And then once, and almost right in here, actually, probably when it crossed over what is this, a 20-day?
Yes.
Exponential moving average. Yeah, when the quarantine and the lockdown started to lift, boom, airlines shot up. And, you know, but now, with the drop over the last few days, I'm not an airlines analyst or anything by that means. But like you said, it's demand that's going to drive the stock's price higher. And as we can see, more people maybe aren't willing to travel yet. They're not willing to get back on a plane. They're not willing to do that. So that's the major thing that we need to see happen. We need to see people comfortable with airlines. And without even having VectorVest, if you see stories like Airlines just had the best week in history, why are you not investing in airlines? Well, when you see stuff like this, boom, okay, yeah, great. We need to get in. Fear of missing out starts to hit in. The new investor, he could get in right here without being able to check anything or without being able to analyze any of the stocks. And what happens the very next day? Boom, gap down, gap down, gap down. And now, do we test support here? Do we test support here? We really have to follow the story and not just follow what people are saying that airlines are having the best week ever. Jump on board.
All right. Do we have any questions, Joey?
Let's see.
Oh, put them up there.
CC is here.
How important is it to set your graph range to match the range of how long you plan to hold the stock? For example, the price looks good for a month, but today it's super high. Hope that makes sense. So, yes, if I am, now, and that's a good question. Let's say I'm a swing trader. I like looking at a 3-month graph to a 1-month graph, okay? Because I'm a shorter term investor, all right? But if I am trying to hold a stock for my retirement, I'm going to put on a 1-year graph. Do you like that for a 1-year graph for a retirement stock? So says, I like that, says. I used to remember a song, say what you want. But that was a long time ago. All right, anyway, if I'm looking to be a longer term investor on this stock, this tells me no, I don't want to be a long-term investor on this stock. If I look at some of the airline stocks, let's go do that real quick. Airlines, let's go highlight them all because I think that makes sense. If I am a longer-term investor, then I need to be looking at a longer-term graph. All right, right-click, view the stock graph. We'll put all of these on a 1 year. Do you like that as a long-term stock? Now, I will add earnings onto a graph when I'm looking at long-term. I don't know if I like that long-term. No. Man, no. Look at these. Look at the volatilities in these. And a lot of this is coronavirus related. I totally understand that. So better yet, let's put on a 5-year graph. Man, that's jets sitting sideways for a long time. Hey, there's American Airline. There's Delta. Delta's got more of a little bit of an up move to this stock, but man, if I'm going to look at any, in the earnings is a little bit more jagged. I got a little bit more jagosity. That's a Glenism. On earnings, let me make that so I can change this style, make it area. Delta's got more of a positive spin, if you want to look at it, on earnings per share. But the whole idea, folks, is I want to look at a smooth graph. This is a 5-year graph. I want to see a smooth graph moving from the bottom left to the top right. So I'm with you. Depending on how long you want to hold the stock will allow me to put on the right look back period on my graph of the stock.
Yeah, Glenn, I completely agree with that. I'm going to jump in for 1 second here.
Sure.
I don't know who asked the question, but that's an excellent question because,
Wow.
A new investor might not think that, okay, here's what I'm going to think as a new investor. This stock's been going up, 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 up. Now it's, 1/4 of the price. I've got a deal. I can get this stock on the cheap. I can get this stock and then, maybe next month it'll bounce right back up to where it was at $20 and I just made 3 times my money. So I'm not thinking about, the amount of time that I'm going to hold this stock, or if I'm a swing trader, I'm looking at a 3-month graph to a 1-month graph. If I'm a day trader, maybe I'm looking at an intraday or a 1-week graph or something like that. No, I see this stock. I say, oh, wow, this stock does nothing but go up. Coronavirus hit. It's down right now. I'm going to make some quick money and just quadruple my money over the next couple months as the coronavirus relaxes and everything goes back to normal. So that's an excellent thing to point out, and it definitely makes sense to position the time frame on your graph as to what type of investor you are.
Big time. All right, so somebody else put a question. Can you give an example of setting a tight percentage stop for a swing trade? Sure. Let's say you're in a swing trade and your swing trade is a 30% gain, 10% loss. A good way to tighten it is, that's a 3-to-1 reward to risk, right? 10 to 10, 30 to 10. 3-to-1 reward to risk. Tighten it down to a 2-to-1. So instead of going 30-10, maybe you go 25. All right, 5-10, that's still 4-to-1. That becomes 4-to-1. Anyway, tighten your lower number, tighten your higher number. What you're doing is you're taking your profits a little quicker and you're taking your losses off the table a little faster. Another way, how about a trailing 10% stop? Instead of going with a trailing 10, tighten it down to a trailing 7. Again, you take your winners a little quicker and you get out of your losers a little faster. So the tightening is all going to depend on you as an individual investor. It's going to totally depend on you, but those are some examples of how to tighten your stops. All right. So the next story is actually all Clayton. Let me go back here. The next story is about Robinhood stocks. And you know something? I got a watch list of these stocks already set up for you, bro.
Look at you, Glenn.
I got you. So take it away. This is actually Clayton's submission for one of the stories today. And I'm going to turn it over to him. Rock and roll, bro.
All right, excellent. Glenn, thank you so much. Yeah, Robinhood, as I don't know if all of you know in here, but Robinhood is loved by millennials. There is zero commission, and a lot of brand new investors get started by using Robinhood. And right off the bat, we can see a lot of the headlines just bullet marked here. S&P 500 historic rally driven by investors ignoring risk. You know who likes to ignore risk? Brand new investors. Investing platform Robinhood reached 13 million accounts in May, and down a little bit lower in the story. I don't know if we're going to cover this whole thing right now, or if I'll just summarize what's down below.
Just take the bullet points, and then I'll get you into your watch list.
All right, excellent. So, yeah, 13 million accounts now in May. That's up from 10 million accounts at the end of last year. So Robinhood's added 3 million accounts just so far this year, and Robinhood users are making risky buys like Hertz, and then there hasn't been this much euphoria in the stock market since the 2002 dot-com bubble. So what does this mean? We've got brand new investors entering the stock market. It's almost like they're entering blind. Glenn, I'm sorry, I don't know the average. I don't know your audience too well, but if we do have kids or if we've got grandkids in the market, one of the easiest things we can tell them to do is educate themselves. If they're just going out and buying a stock because we see a news article that says this stock is cheap, or because we see a news article that says this stock is going up right now, I'm going to equate that to nothing more than investing and just jumping on a bandwagon blind. So if we just go back and we take a look at this article lists 10 stocks down below, but if we can just jump back, I think this is the program down here.
Yep. Go over to all the way to the left. Yep. And then scroll down the list. You got one with your name behind it.
All right, cool. So if we jump into this watch list here, we can see the 10 stocks that they said were most bought. I think it might have been over the recent week. And what do we see right here? Right off the bat, I mean, today's a down day, yes. Glenn touched on it at the beginning. Market was down, 2-3% today. But look at these stocks right here. Almost, 15 to 20% average that these stocks are down today. That's inherently they're risky. I think we got 3 airlines in here, and I hope I'm pronouncing this right, but Nikola Motors wants to be a Tesla competitor. And we've got a few other stocks in here like Hertz Global. You see Hertz, and I'll just pull up a quick graph of this. But Glenn, you may have touched on it before in some Trending Thursdays. I'm not exactly sure.
All right, let it go. I got you.
Okay.
I
don't know why I got stuck. But yeah, Hertz Global, guys. And Robinhood, that article actually had a graph on there that shows the relationship between the price of Hertz and then how many new investors have that holding in their account. And I think it was somewhere around 3,000 people were holding Hertz around here, And as the price went down, it started to go up. And now 142,000 accounts, or 142,000 accounts as of when the article was released, were holding Hertz. So, these are brand new investors that are buying a stock that they think looks cheap. Of course, if you see this stock trading around $1 a share, when only a few months ago it was trading at $20 a share, if you're not analyzing it and you're not looking at the risk that lies within, you're thinking, okay, well, I buy it for $1. All it's got to do is go back to where it was 3 months ago, and I've made 20 times my money. And you could do this. You could look at all of the graphs on here with all the airlines that have come down and so forth. We're looking at stocks. Hopefully, Glenn, is this going to close out the graph, or is this
just the graph? You're good. You're good.
Yeah, and if we go back and we look at a lot of these stocks, relative value, Nikola's a brand new company, at least in the VectorVest program, so relative value is still low here, and it's trading way over value. I think we got the value at $6, and it's trading at $60 a share. But that's what you're going to get with new companies and with a lot of people jumping into them because of a new technology like the electric fuel cells and the electric vehicles and the fuel cells that they have. People are going to be interested in it. But Airlines, Gush, I had a friend who, as Gush kept going lower and lower and lower, and more stories were coming out about demand in oil falling and supply rising, what did he want to do? He got into Gush. And as it went down a little bit more, and Gush used to be a 3 times leveraged ETF. So unfortunately for him, he bought Gush as a 3 times leveraged ETF, held it down, losing 3 times margin essentially. And I don't know if he still holds it or not, but if he does, now as a 2 times leveraged ETF, it's got to go up, that much more just to get back to where it was at. And guys, I'll let you go ahead and graph all of these if you have time to do so, but it's the same story over and over. Tops, I wouldn't touch Tops with as long a pole as I could hold. Tops is exactly like dry ships, and I don't know if you guys know anything about dry ships, but you can see the headlines that surround Tops. All they keep doing is issuing new share after new share after new share, and just diluting investors and bringing the stock price down. So without looking at any of this information, you see a cheap stock, you say, hey, 1 month ago it was worth 10, 20 times this amount. I'm basically going to buy my lottery ticket and just hope for the best.
Oh, sorry about that. I got to fix that. I closed the program. Joey couldn't find the mouse. Oh, boy. That goes for me. I just typed the boo.
You're good.
How could you got it on there?
I don't know what you did.
I'm just saying, how did that...
Wow. Are you still there, Clay?
No, I'm still here. Yeah, we'll just go down in this article real quick and to show you what it looked like. But yeah, this is a graph showing as the S&P 500 went down, the new amount of users and Robinhood users taking positions in the S&P 500. So what is this showing? This shows that these new users, they're looking for deals, they want to make quick dollars, and they're willing to take on risk, even though they might not understand that risk.
Just take the whole thing over there.
And then we've got a little, we've got the 10 stocks that were in that watch list here, and then here's what I was talking about with the price of Hertz. As Hertz comes down, and then the amount of new investors that are jumping in. Like this little spike here at the very end, we can see, I can't read these numbers here, but it looks like an extra 40,000 people jumped in and began to hold Hertz just because they didn't want to miss out on getting a deal.
And I'm going to throw in there that they filed for bankruptcy on May 22nd.
Yeah,
they did
absolutely.
file for, and I'm sitting back and I'm going, who the heck is going to invest in a company that just filed for bankruptcy? That's kind of crazy. But
yeah, somebody who doesn't know that they filed for bankruptcy. Nobody's reading these articles. They're not doing their research, and they just see a cheap stock.
All right, and I think that it's stories like this that Clayton brought up that make the difference in a brand new investor making money and not making money. All right, and this is what Clayton brings to the table. These are stocks that are out there, and people are going, whoa, yay. We looked at every single one of those stocks in the watch list. They look like this. Just like a bear. That was a bear market watch list. You know, and if they're trying to make money, they ain't doing it because they're going to get knocked out trying to play that watch list of stocks.
Exactly.
All right, so thank you for that. And that was Clayton's story that he brought to the table, and I think that is a true story for a lot of the brand new people that are getting into the market. This is what they see, and then this is what they go with because they don't know any better. Again, this is why you need to send your people over to Clayton. Clayton's going to put a lot of these misnomers to bed and get people on the right side, especially if they're new investors in the market. Get them on the right side so that they don't get caught out there with these traps. A lot of these are traps. They're just traps.
Absolutely, Glenn. And you know, a few new investors might get lucky. They may have bought Hertz down here, and they may have sold when Hertz went up, 4 times over the last few days, and they may have made some money. But you know what happens when they try to do it again? They're going to get burnt that time. So, excellent if they got in and they got out and they made some money, but now it's time to make some informed decisions. It's time to make some VectorVest informed decisions and invest, not just buy something and hope that you get a 10 times return on your gain or 10 times return on your investment.
All right, with that, thank you for that, Clayton. I don't know, Joey made me close this out. I don't know, he did something. I swear I don't know. I was just fine until Joey said, "Where's the mouse?" And I clicked on it, and then it closed out the whole program. That was all Joey's fault. All right. Now, somebody asked me about Contra ETFs. I don't have a story on it, but in the markets, given what we got in the markets condition right now, I'm going to do something real quick. I'm going to show you if the market continues to move down right now, Contra ETFs may be a good way to go. So how do you find them? Well, and if you're on the podcast, you're just going to have to listen to my instructions so that when you do get home, you can do this. In the watch list viewer, all right, we're in the viewers, go to viewers home. In the watch list viewer from viewers home, click on it. You're going to see a yellow folder that says ETFs. Click on it. VectorVest has an awesome way of putting both regular ETFs and real quick, what is an ETF? It's an exchange traded fund. It's sort of like a mutual fund, but an ETF can trade like a stock, whereas a mutual fund's got a whole bunch of load fees and a whole bunch of other things that go along with trying to invest in a mutual fund. An ETF or an exchange traded fund will normally trade an indice or an index or a group of stocks, all right, just like a mutual fund. But again, it trades like a stock. So we've got different levels of ETFs. That's a regular ETF, and then there's an opposite. There's a Contra ETF, and Contra is short for contrarian, which means it moves the opposite. So if there's a bullish ETF for the S&P, there's a bearish ETF or a Contra ETF for the S&P. And the cool thing about ETFs is whether they're bullish or bearish, you buy them long all the time. You never have to short. So for any of you who do not like shorting stocks, ETFs, whether bullish or bearish, might be a great way for you to go, especially if you're not comfortable shorting stocks. So with the market's conditions the way they are right now, I'm going to concentrate on how to utilize Contra ETFs. So the question was, well, how do you know when to put them on? Well, let me tell you a little something about this. What you see right now is a primary wave and a red light in the color guard pricing column. This is a good opportunity to start dipping your toe, not your whole foot, all right? And make sure your foot's clean before you start sticking it in somebody's pool. But you want to make sure that you dip your toe, not your foot, into the water. This is a good opportunity to start looking. Primary wave down, red light in the color guard pricing column. Let's go back to the viewers tab, all right? I'm going to start you off as a brand new person looking at getting into Contra ETFs. I'm going to say that you first start off with non-leverage Contras. These are not leverage. What does leverage mean? Well, if I stick a pole on top of another log, you stick under another log and use that as a lever, that's leverage, so I can move that big old log. Well, leverage gives me more usability to utilize my money a little bit more on the ETF. It's leverage. So leverage, 2 times leverage, 3 times leverage, helps me to grow my money a little faster, but it can help me lose my money a little bit faster as well. What I'm looking at right now is non-leveraged ETFs. We have on the treasuries, we have on communications, we have on gold. And how do I know those names? Is because I'm just looking at the names. If you ever want to know what they actually are, if you right-click on it, this is a short on the Dow, but if I right-click on it, you can always go to a full stock analysis report, and from the full stock analysis report, read the business description. ProShares Short Dow 30 is an exchange-traded fund launched and managed by ProShares, invests in the public equity markets of the United States. But it is a short on the Dow, and again, you buy it long, all right? So let's take a look at these. If I were looking at any of these to get into today, I would always short by percent price change. Which ones look good today? Woo! DDG. Well, that's on the Dow, baby. Actually, that's on oil. Oil not good. How about we get a Contra ETF on oil? That way, if I don't want to play an individual oil stock to the downside, why not play the index? This is on small cap. ProShares on small cap. What's the small cap? The IWM, right? The Russell 2000. Well, when the market first starts going down, those low dollar stocks are going to get smoked like smoked. All right, man, going to say some bad things, and that would be bad. I ain't trying to get hood up in here. All right, so the financials, the Russell, the mid cap, the Dow. Now, the cool thing is you can see what's moving. But if I'm looking at a group of stocks from a watch list, I'm going to give you a tidbit of information. If you're looking at a group of stocks from a watch list, I want you to scroll over in that watch list and sort the watch list by average volume. You want to make sure that not only are you in Contra ETFs, but you want to be in the ones that have liquidity. And right now, if I look at this is on the S&P 500, on the NASDAQ, on the Russell, on the Dow, and how about each one of these are moving up today? So on a day like today, question came up is when do you start playing Contra ETFs? When you get that primary wave down and red light in the color guard pricing column, that's a good way to go. Now, if you're a little bit more aggressive, all right, let's scroll up the list to the 2-time leverage Contras. Click on it. And what do? The first thing, because you're looking at a watch list of stocks, move over to average volume. Make sure you have liquidity by sorting by average volume. Now what's come up to the top of the list? Still on the S&P 500. How about on gold? The gold miners, and how about them making a killing today? But keep in mind, these are 2-time leverage. So you're going to make more money as these indices run down. You really want to make some dough, bro? Woo! Let's go to the 3-time leverage Contra. Whoo! How about you gonna make some money? You want to see what's going to happen? Ooh-wee. That's right. Let's move over to average volume. Always remember when you look at a watch list of stocks, you want to make sure that you're in liquid ETFs. Now it's rocking. How about the Qs again? Large cap, S&P 500, small cap, Dow, semiconductor, biotech. All of these are in double-digit wins today. And I can go down the list, mow and mow and mow, and make some more dough and dough and dough, and be happy, go ooh-wee, and watch my portfolio take off like an airplane coming out of JFK, baby. This is the way to make money on a downtrending market like today, Contra ETFs. But the more aggressive you become, understand the more money you can lose, which is why I started off with non-leveraged Contras first. So I thought that was appropriate to talk about today with the market's conditions they were today. And man, whoever asked me that question, did they answer in the room that they liked that or did not like that, or does it matter? Joey says it doesn't matter. All right. So Joey, you just said that the customer in the room doesn't matter. I'm just putting that on you. That's what you said. All right, everybody. VV Nation, this is what we say to Joey right now. Okay, that's what we say to Joey right now. All right. But somebody did ask about that, and hopefully I addressed that. And, you know, for a lot of people out there who are thinking about it, a good way to start thinking about playing the market to the downside would be the non-leverage contras. But always remember, because you're looking at a watch list of stocks, the first thing you ever want to do is to make sure you have liquidity. Always sort the list by average volume before you start to look at the stocks to get into. Hey, Clayton, you want to add anything to that?
No, I think, you talked about whether or not you should be getting into regular or contra ETFs, leveraged ETFs, and so on and so forth. And, you know, it's just you can see the correlation between these gains here, 18, 16, 13% gains when the market's, I don't know what the market's at right now, down 3, 4, 5%.
Yeah.
And that's the power of the 3 times leverage. And, guys, it goes the other way, too. Glenn mentioned it a few times. Obviously, these stocks tomorrow, if the market goes up 5%, these stocks could be back down 15% tomorrow. So they move. If it's a 2 times leverage ETF, it's a 3 times leverage ETF, they move in concordance with whatever the underlying asset that is that they track.
Oh, question comes up. What about contra ETFs? Yeah, there's one main contra ETF that I look at. It's called the VIX. A contra ETF means that the market doesn't move it. So the market can have high volatility on an up day or on a down day. Market doesn't move it. So a contra doesn't, you say, what are they? What is a contra? What is a contra? It means that it doesn't, I hate explaining this because these are ETFs that the market doesn't move. Looking at, the dollar. The dollar could go up or down whether the market is up or down. How about a contra is in its own world? It's in its own world. When gas goes up, it goes up. And the contra of gas means that it doesn't move with the market. All right, and does everybody in the room understand that? Let me put that out there. Contras, and look at what's here. Look at what's here. Contras are stocks or ETFs that the market doesn't move. A lot of gold, a lot of oil, and anybody who says no, I can't explain it any better than that, which is why it's tough. Which is tough for me to explain. A contra doesn't move with the market. That's why it's a contra. I hate that we gave it that name. I so hate that we gave it that name, but it makes sense that, a contra moves opposite of the market. A contra, the market really doesn't move it. All right, so what is the benefit of contra ETFs? Well, if I wanted to play gold, or if I wanted to play oil, those kinds of things, I can play them whether the market is moving up or it's telling me that it's moving. Well, it's telling me that it's moving whether the market is moving up or moving down. So I'm going to leave it there. And I apologize for not being able to explain it better. But a contra doesn't move with the market. Clay, you want to add anything to that?
Oh, I look a lot at the dollar, and I look stories about the dollar, and it doesn't matter if the stock market's going up, if the stock market's going down. A lot of things affect the dollar, but it's mainly not a stock. It's mainly not moved by the stock market. So that just goes right along with what you were saying. If you're investing in the dollar, it doesn't necessarily matter if the stock market's being driven higher by Amazon today. The dollar, is its own beast. It's got its own.
It's in its own world.
Exactly. It's got its own drivers, and it's not affected by the movement solely by the movement of the market.
Somebody says, "What about conga lines?" Oh Lord, oh boy, I'm not listening to you. All right. Can you explain how long a play theoretically will be? A play on any stock, although is going to always going to tie into your stops. always going to probably try to pull into your stocks. All right, where am I at? I got one more story. Stocks of interest. Grubhub. I'm going to go through these quick. Grubhub stock rises on a confirmation of Just Eat takeaway combat deal. So Grubhub was getting bought by Uber. That fell through. Grubhub is now, who the heck is JustEatTakeaway.com? I don't even know who they are. But whoever they are, they're buying them. And everybody's going, yay! That's what everybody's doing. Everybody's going, they're gasping, and then they're giggling. That's exactly. All right, so that's a big move. That's the stock that caught my attention. Tesla. Man, Tesla stock surges past $1,000 on Elon Musk's push for Tesla Semi. Listen, am I the only one that thinks that truck is ugly? Did you see the other truck they got going on? What is it look like an armadillo truck? That's an ugly truck. But listen, I'm not the one that's got to buy it, but I don't think the Semi looks all that good. But they're really pushing. Remember, how about an electric freight truck? That would be kind of cool. Less gas. You know how many? Have you ever seen a Semi fill up at a gas station? They sit there for about 11 hours just filling up with gas. They got one side of the tank to fill up, and then they got another tank to fill up. Man, there's a lot of gas. There's a lot of gas. And Hertz, there it is. Hertz stock gives back more than half of the post-bankruptcy surge after they got delisted, baby. All right, so Clayton was talking about that as one of the stocks that's in Robinhood. Car rental company will appeal delisting. How are you going to appeal delisting? You filed for bankruptcy. If the New York Stock Exchange is saying, listen, you don't meet the criteria to be a stock in our listing, how are you going to fight that? I don't know. That's just my opinion. That's just my opinion. You know, and I think that the New York Stock Exchange is going to do this. They're going to knock them out. They're going to say, Mama said knock you out. They're going to knock them out because I don't think they got a leg to stand on. But that's just my opinion. That's just my opinion. If you file for bankruptcy, I think the New York Stock Exchange has the ability to take you off. But again, that's what I think. And last but not least, how banks will deal with the coronavirus aftermath. Is bank failure imminent? I think that this is a souped up, hyped up story to scare the hell out of everybody. I don't think that I think that we're at a point where some of these banks are just too big to fail. I still think so. But I think that is bank failure imminent? I think that that's a hype thing. All right, so let's go to my last few stocks in here. Oh, where am I? Trending Thursday, 6/11. Here's my stocks of interest. All right, what are they? Grubhub. All right, let's go find Grubhub. Tesla's another one. Let's go find Hertz. Where's that at? And let's go find banks. What was I using for banks? I was using Bank of America for banks. Real quick, Tesla, way overvalued. Upside potential, safety, little better, really moving up. Grubhub, way overvalued. Upside potential, nope. Safety, nope. What's moving up? News. All right, did he get bought by somebody else? News is driving them up. How about the earnings growth rate is negative 9%? Bank of America, 23, fairly valued. Upside potential, nope. Safe, relative timing, growing their earnings at a negative rate of 3%. Hertz. What do you got to say about Hertz? It's undervalued. Yay! Upside potential. Okay. Safety. Nope. And what's it doing right now? It's going down in price. I don't know what was the craze over buying Hertz. You see what the RT is? The RT is weight in bear territory right there. All right. And I think that a lot of people, that was an aggressive, I think for the most part, for anybody who made money on it, that was a lucky play. Do you agree with that, Clay?
Oh, absolutely.
I think that there was nothing good about Hertz that said it was okay to buy it. And the stock claimed bankruptcy. Listen, I'm just putting it out there. I'm letting the software do its job. Let's go graph them real quick. Let's go take a look. Hertz. Nope. What does Hertz look like? Like they dropped a bomb on it. All right, look at that earnings per share. Remember, earnings is the engine that drives the stock's price higher. This was, as Clayton was talking about, those are those new people. man, Hertz is low. Let's go buy stock. Yay! And then it says, oh no, Mr. Bill. And it fall down, go boom. All right, there you go. That's tough. That's tough. I think that was a lot of the luck of the Irish. Top of the morning to you, Charlie. Yeah, you going to buy Hertz? Sure, we're going to go to the pot of gold. Yeah, it was that kind of play on that today. Joey, you didn't laugh. That was funny. It was funny. Clayton, was that funny?
Hey, man, that was hilarious.
There you go. Joe has no creativity in him at all. All right, let's go to the next one. Bank of America. Interest rates are low. Banks are going to get, I think, are going to get hurt a little bit. Here was the Fed yesterday talking, and this is today. Relative timing is going down. Earnings on Bank of America is going down. Be careful with the banking stocks with the current market condition. This Grubhub, this is news-driven. This is straight up news-driven that they're getting bought. RT is still above 1 and very nicely above 1. Earnings is not there, but the price is above the 20-day exponential moving average and moving higher. Clayton, do you want to add anything to any of these 4 stocks that I put up here? These are my stocks of interest. Every week, I find what stocks catch my attention.
Glenn, man, I think you hit it. You covered everything, man.
All right. Well, VV Nation, we're getting ready to let Clayton go. Step up.
How can they get a hold of Clayton?
Clayton, how they can get a hold of? I don't know how you get a hold of you. You tell these folks how to get a hold of you.
Man, I don't even know how to get a hold of me. I can't even get a hold of me half the time. Come on now.
Well, you want to share your email? Yes or no?
Oh, I mean, yeah. If they wanna email me at clayton.debird@vectorvest.com, that's fine. But, Glenn, they know you. Maybe they get a hold of you, and then you get a hold of me. I mean, this is your audience we're talking to here, right?
This is but it's going to be your audience too. This is VectorVest. That's right, Mark. This is VV Nation here, but yeah, they're going to be part of your people too. You know, and they're going to send people your direction. People, especially who are brand new subscriber, brand new investors in the market. VV Nation is going to start to send them to you so that they can catch. Clayton should charge $1,000 an hour for advice, not including tax. Really, David?
Well,
really, David?
Yeah, Glenn, I think I've been on here with you for, an hour and a half now?
Yeah.
So, what does that come up to, about $1,500?
About $1,500.
I'll send you the bill later. I got your email.
All right.
Checks in the mail.
The checks in. So you see his name up there.
There we go, Joey.
Is it Clayton.deberti@vectorvest.com?
Yeah.
All right, so
I've never emailed myself. I think that's what it is. So we'll find out.
All right, and I want you guys to look at him. I want you guys to support him, and I want you to comment on today's episode as well. How about this? How about Jay Hall says, "Hey Clayton, I'm in Akron. Did you see that?
No, I didn't see it.
All right, well, there's somebody saying that they're in Akron, so we got some people. That's near you. I see Laura says, I'm too new. Not sure I understand much, but going to keep learning. Thanks for your help, Glenn and Clay. There you go. So look at that, Clay. You got a positive effect on people already. So, you know, before we go, again, I want you guys to support Clayton. He's going to be an integral part of what we do here on YouTube. He's going to take the world by storm. Don't forget to comment, like, and subscribe, folks. All right, I ain't done yet. I know we're running. Joey took bets on how long we were going to be today. I'm not done yet. As we let Clayton go, we're going to start to look at some of your stocks as well. So we're going to do that. But Clayton, a lot of people are saying they appreciate what you did here today.
Well, thank you so much, guys.
And I appreciate you here being with me today. I wanted you to show these people what you were all about, because I believe in you 111,000%. I want them to know that I believe in you and that I support you, because I want them to support you.
Well, thank you so much.
111,000%. So
yeah, thank you. I mean, you make it easy. We'll just put it that way.
Well, I'm a little unorthodox. That's an easy thing for me to say, is I am a little unorthodox, but I wouldn't have me any other way.
Absolutely, and I wouldn't either.
All right. So again, thank you for being here, my friend. I look forward to having you on board again for another presentation at some point in time. We'll talk about that. I think you did an outstanding job today, and I think you're going to do an outstanding job on YouTube, bro. So,
Thank you so much, Glenn.
I want you guys to support him. And as we're letting him go, we're going to go through VV Nation stocks today, and we're going to take it. So have a good day, my friend.
Thank you so much, Glenn. Hope you guys all have a great day as well.
You got it, man. All right. So now, thank you guys for supporting Clayton today. Thank you for everything that you did for him today. Talking to him and listening to him. He's right on point. FinTrade says, go Dolphins. Really? Dolphins stink. Everybody in Florida just stinks, except for my kids. My kids are in Tampa. All right.
What they thought about.
I did that. Oh, well, I said comment. All right. What did you guys think about today's presentation with Clayton on today? I want a good, bad, and different. Talk to me. What did you think? All right. What did you think? I want to know. Don't get all shy now. I didn't tell you to put stocks in. Stop putting stocks in. I'm asking you a question. What did you think? What did you guys think about today's presentation? All right, what did you guys think about in my test? If you keep putting the stock in there over and over, I saw it the first 50 times you put it in there. I got you. You keep putting it in, I won't take it. I got you. Huh? Okay. Well, what are you okaying me for? I just want to know what everybody thought. I use my inside voice. Clayton was awesome. Very good. Awesome. Great. Good addition. I agree with that, Peter. Bounced around. And listen, Zach, we both did bounce around a lot in regards to what was going on. I think today was a day that what's going on in the market that we took a look. We take a look at a lot of different things. So very informative. Clayton was great. Excellent. And a good addition to the team. I think so as well. Joey, thank the sound button. Take the sound buttons away from Glenn. Wow. You don't like my sound buttons? I love my sound buttons. Jay says, which one was Glenn? Wow. All right. What is his position? Clayton is in our education department, just in the Ohio office. I like that. Mediocre Gamer says, good stuff. First time viewer, keep up the good work. Thank you for that. I appreciate it. Love those sound buttons, says David. Great job, both of you. So I like that. I'm glad that you were receptive to him being there. Now, I like Clayton. You need someone to back you up, Glenn, and I think Clayton is perfect. You guys think similar ways. I like that too, Andrea. I really do. All right, with that, now, type in your stocks. NKLA. Type in your stocks. Joey's going to give them to me, but before he does that, I've written down a couple of stocks. So I'm going to say it. I want to go charge. Joey needs to find me that. Joey needs to find. Hold on, not yet. All right. PACD, UVXY, NKLA. All right, go ahead, Joey. CODX. CLDX.
For the third time.
Okay, wow.
TVIX.
That's a Contra, by the way. TGTX.
UVXY.
I already have that in there. Okay.
OXY.
Oh, Occidental Petroleum. Okay.
YY.
Hey, YY. I don't know. Okay. VOO. It's not like Voodoo. That's the Vanguard. S&P 500. Okay. I'm going to put in SRTY, and I'll tell you why in a second. Go ahead, Joey.
NAKD.
Okay. Naked. GNUA. That's not a stock that we track. GNUA.
Yes, sir.
All right, not a stock that we track, unfortunately. SE. Okay.
MA.
MasterCard.
Spirit Airlines.
SPR. TMDI.
No, go take that one.
Okay. Okay.
Save, SAVE.
SAVE, save a lot. Oh, that's Spirit Airlines. I put Spirit Air Systems. Okay, I got you.
Not today, FinTrade.
Not today, FinTrade. What did he say? What did he do?
You can probably guess.
Oh.
And then.
Yeah, not today, FinTrade.
Let's take one more. We'll go BZN.
BZN. I don't track that.
Then SLB.
SLB. I track that. All right, Joey gave me the stocks. Let's go check them real quick. All right, let's go check them real quick. Let's go put this on a 3-month graph. I always look at a 3-month graph because what happens in every 3 months on the stock earnings, I want to keep that in the picture. All right, as I look at FLGT, stock is still in a channel. All right, I see I'm using support and resistance line. And actually, it broke below this support line of $15.28. It also broke below the 20-day exponential moving average. If you own it, be careful. It does have another level of support sitting at about $14.20. If you want to give the stock a little bit more room, but it's dropped below the 20-day exponential moving average a couple of times. If you do want to give it more room, it does have another level of support. RT is starting to fall. Earnings is falling. I don't like it from an earnings perspective, but you can't beat a stock that's moving sideways, except for right now it's giving you more of a bearish feel, okay? Excuse me. Let's go to the next one, PACD. All right, my graph is taking a little bit longer to, still taking a little longer to, wow, what is up with that? Let me see if I can go to the next stock. All right, so PACD is taking a lot of time to load. Let's go to the next one, UVXY. This is on the VIX. As the market is picking up.
Hang
on. What?
I don't know what you put it on.
What do you mean?
Something else. Why did your head get all big? Look how big you are.
I don't know. I didn't touch it.
You probably did.
How did I touch it all the way over here?
I don't know how you did it.
You know what that means, right? All right. Anyway, so UVX, as the volatility in the market increases, I see that it jumped up. This is a Contra ETF. So again, the market inadvertently on its own doesn't move it, but it moves in its own way. If I'm going to get into it, if I'm not into it now, good strong day on it. If you play the VIX, good strong day on it. I would like to see more confirmation of RT, but good strong day. If nothing else, I wait before it jumps above that level of 48.24, which is the next level of resistance. All right? Or if you jump on board with it now, just know that you're buttoned up against resistance right now. Next one, NKLA, Diversified Companies, Nikola Motors. Every time I look at that now, I'm going to go Nikola, like the cough drop, except for it's going to go Nikola. Anyway, it's pulling back. Watch that. It was traveling nicely above the 20-day exponential moving average. Earnings per share were looking good, especially over the last 3 months. As the stock's price is falling, watch RT. RT is a smart enough indicator to let you know, just be careful. And you see how it pulled so far away from the 20-day. Let's go move this down to a 10-day. And you know something, I'd rather get out on the 10-day exponential moving average because it's so far above the moving average. I'd rather get out on a 10-day more so than a 20-day. Man, what just happened? Error loading the graph. Wow, something just happened in my software. PACD, I can't look at it. That's Nikola. Codex. Woo, that actually is a coronavirus stock. Actually was moving sideways, pulled below the 20-day exponential moving average, closed below a level of support at 1589, and RT just went negative. Be careful with that if you own it. A lot of sideways move, picked up some bearish momentum, now continuing the bearish momentum, especially with RT. Earnings is rising though. I don't think earnings rising is enough right now to keep you in the stock. I'd wait for a better buying opportunity. I know that long term it looks like it's going to be good, but right now may not be the right time. I think right now is the wrong time to be in the stock. CLDX, another drug biomedical. Look at the big update today. Let's go see what's in the news that happened with it today. Big move, 91% up 7 hours ago. Implied volatility surging for Celldex Therapeutical. Investors need to pay attention to Celldex Therapeutical stock based on the movements of options market lately. Whew. I do like the rise in RT. I like that the earnings is getting better. Still negative, but less negativer. Yes, I said that. Stock moved to a buy. Listen, this is a trade. This is more of a trade. This is a big update, 91%, a little bit of give back, a lot more bulls pushing it up than bears pushing it down. I do have some people trying to take profit. That's that wick at the top. Just be careful with it. I like that it's above the 20-day exponential moving average. That's a big up day. Let's go put on volume. I do want to put on volume. And I bet you the volume spiked up big time today, and it did. It makes sense. But look at prior to that, it was just la la la, la la la, la la la. And then the news came out. That's big news. If you're in it, just be careful. I foresee a lot more profit taking going on because the stock closed yesterday at 480. It's twice that. It's almost twice that. A lot of people opening up going, holy smokes, I just made some money. That's exactly what they feel that good. They're looking at that stock going, and they're going to take that money back. I'm just trying to tell you, and that's what's going to happen. That wick is going to happen at the top. Just be careful with that. TVEX, another Contra ETF, just like UVXY. As the volatility picks up in the market, this ticker symbol will as well. Big volume, actually the biggest volume in the last 3 months as well. Just keep that in mind. How about Jake said made 20% on CloudX today? That was on that one. Just be careful with that. Don't give it all back, Jake. Don't give it all back. And on TVEX, also button up against a level of resistance at 233.31. It's got some room to go. So if I'm in it, I can take that. Good volume. RT is not backing up the move yet, but I won't discount. Nice update on the stock today. TGTG, another biomedical, pulling back. Be careful with this again. RT hasn't confirmed that it's in a downtrend yet, but it is below, and I'm going to put this back to a 20-day exponential moving average. Still currently below the 20-day. As it started moving sideways, RT is pulling back. Volume is all right. Just be careful. I like knowing that it's below the 20-day. I don't want to I don't want to pick up any more losses on it. All right, something to just consider. Something to consider. Occidental Petroleum, man, another sideways moving stock for a lot of the last 3 months. Pulled up above the moving average, broke above, and had followed through, moved up, and now oil again. You know how I feel about oil. I've been saying it for the longest time. You know how I feel about oil, but and Rich is a different person. I'm not trading oil right now. I got nothing that says it's okay. I got no demand. I ain't got no demand. Hey, you got demand? Because I ain't got demand.
I am the man.
You are the man? No, I'm the man. You ever heard that story by what's his name? You can tell everybody. Oh, you can tell everybody. I'm the man. I'm the man. I'm the man. Yes, I am. Who sings that? Somebody. I don't remember who sings it. Somebody's gonna type it in the room.
That's the girl.
It's not a girl. It's a guy. Oh. It's a guy that sings it, and that's my theme song. I'm the man. I sing that to my wife all the time, and I walk in the house. She says, "Hi, man." I said, "Yes, I'm the man." And Aloe Black, that's his name. Aloe Black, that's the name of the song. All right, that's my theme song. No, it's not Gladys Knight. It's not Joe Jackson either. No, it's not TLC. It's Aloe Black. Man, where are y'all getting these music? Man. Anyway, YY, Telecom. Love that it's above the 20-day exponential moving average.
It's Taylor Swift song.
Say again?
It's a Taylor Swift song.
It's not a Taylor Swift song. I'm the man.
Sure it is.
No, it's not. Really. It's not a Taylor Swift song.
Voice.
It's not a Taylor Swift voice. Aloe Black. That's right, Terrence. It's Aloe Black. All right. Stock got to a level of a high. But since that high is pulled back, you know something? Let me shorten this down to a 10-day moving average. I would use that as a means to get out of the stock. Nice update today. As it approached that level of the 10-day exponential moving average, watch RT. RT pulled back, but still trending up. I like YY. And I would say use that 10-day exponential moving average as a level of getting out of the stock at the right time. All right? I do like it. It is one of the few stocks that I've seen today that I do like. All right, Flow Rider, my house. Really mediocre? You ain't got no Flow Rider at your house. If you do, ain't got those apple bottom jeans, the hips with the furs. No, it's my words. Let me sing my song. Vanguard, U.S. large cap. As the market was moving, coming off of the March low, all right, coming off the March low, nice move up on it. Man, market gets hit, and this one does too. If you're looking at that as a long-term, if you're looking at this long-term, I'm assuming, Rich, does this have, check this out for me, does this have options on it? Can anybody tell me that? I know it's a Vanguard. Somebody tell me if this has options, because I love the long-term play. Even though this is a 3-month graph, I love the long-term play. This is the time that I would sell covered calls. This is the time where I would sell covered calls. Somebody let me know, is there options on this? I'm asking Rich because he's normally the guy that can get me that answer pretty quickly. But evidently he's moving really slow right now. Say again?
How many stocks do you have left?
How many stocks? Wow. Joey is trying to get me done. All right, anyway. Joey doesn't like me today. Anyway, if there was options on that, I would sell covered calls. All right, and yes, it does. Thank you, Anas. It does. So I love the move on this. I would sell covered calls on this. I wouldn't want to get rid of it. SRTY. I own this in my own personal portfolio, looking at the Russell 2000. Last 2 days up nicely. I do like that it's above the 20-day exponential moving average. And look at that volume. RT is not backing it up yet, but nice move. I'm loving that. If the market's turning over, Russell 2000 stocks tend to go up really fast when the market moves up, and it will take and drop really fast when the market moves down. This, I think, is my play of the week, would be SRTY. This, as long as the market continues to go down, this is my play of the week, SRTY. Naked brand apparel. Man, look at that. A lot of give back, shooting star, follow through. I'm not sure I'm really wanting to touch this right now. I see RT is above 1. A lot of volatility, but it makes sense with a lower dollar stock that I would have a lot of volatility. I definitely need to be buying on an up day. That's the biggest guidance that I can get here. All right, have a good day, Bob. That's probably the best thing I can tell you. SE, I love this graph as well. I don't like the earnings, but I'm not going to ignore price action. Price action is doing a really good job. Let's put this back on the 20-day. Doing a really good job tracking with the 20. I like this stock. Oh, man, it's so far away from the 20. I would keep it back on the 10. I like this. RT is starting to fall a little bit, but still above the value of 1. If this has options as well, I would sell covered calls. I like the smoothness of the graph. All right, next one. MasterCard, same kind of scenario, nicely moving up. Big down day. I know MasterCard's got options. Right now, with the smoothness of this graph, I would definitely want to sell covered calls on it. Some of these stocks I don't want to get rid of, especially looking at some of these graphs. Whereas on Spirit Air Systems, I'm not nearly wanting to sell a covered call on it. It's below the 10-day exponential moving average. Somebody put stochastics on here. I can see that. I'm going to clear that all out. Take the stochastics off. Stock is clearly below the 20-day exponential moving average, and RT confirmed the move by saying that it's currently in a downtrend right now. Safe. This is Spirit Airlines. Also, right now, below the 20-day, RT below 1. I'm going to let the graph talk to me. The graph is telling me I don't want to be in it right now. And the last stock is Schlumberger. It's not. It's not Schlumberger. It's Schlumberger. Okay. You say Target. You don't say Schlumberger. Anyway, watch it. You know how I feel about oil, how I've been depicting oil. RT just recently today got below the value of 1. So that helped to confirm the stock's price below the 10-day exponential moving average. All right, I'm done. I'm done. Well, don't just turn it off. I got to say goodbye to everybody. Don't be just turn. Listen.
I'm right here.
Keep messing with me.
I'm right here.
Keep messing with me. All right. We had a great We had a great day today. Joey is right. Wow. Don't help him, Brian. Leave him alone. All right. Got almost 800 shares of SRTY. SRTY is a good trade. I'm personally trading. I think that is my trade of the week given the market's condition right now. All right, folks, we had a big day today. We had Clayton here. Clayton really is an awesome addition to the team. Thank you for your feedback today. You guys have a great day. Let me put this on. And continue, if you haven't already, subscribe to the page. If you haven't already, subscribe to the page. And that's it. I'm done. That's a lot of talking. I've been here a long time today. All right, so with that, folks, have a good day. Adios, arrivederci, ciao, au revoir, sayonara. Aloha. I'll see many of you on the Jockey Club tomorrow. Thank you for making this an excellent, outstanding, trending Thursday. All right, with that, folks, at Beach and Glenn is wrong every time he says the New York Giants are good. Don't hate, David. All right, with that, folks, later. Peace.